this session, we are going to discuss what is a check, what are the types of check. Let's start. So now we are going to discuss what is a check. A check is a negotiable instrument. Check and its types of check. Like in our daily scenario, we will see good number of checks like self-check, account pay check. What are the other modes of checks we have? Here we will discuss. Before discussing types of checks, let's discuss what is the definition of check, what is its purpose. Then we'll dive into what are the types of checks. Let's start. Check. What is the difference of check? A check is a document. Check is a document. Check is a document issued by customer to its bank. So, in order to understand check, first we have to know the relationship between customer and bank. Customer used to deposit his money with the bank. Now, customer's money is with the bank. Whenever he wants to withdraw the money, he have a good number of options. Like through ATM, he can withdraw, through check. Check is one of the option to withdraw his money. Now, what is the definition of check? A check is a document issued by the customer. So here, who issues the check? Check is issued by the customer, means account holder. Here the customer is account holder. Here the customer is account holder. Customer means account holder. Customer means account holder. So to whom he will give the check? A check is a document issued by the customer to its bank, directing it to pay the specified sum. On check, you will find the amount, specified sum, mentioned in digits, that is in numbers. Say for example, 1 lakh rupees. 1 lakh rupees, as well as in words. So in words means you will write like this, right? 1 lakh rupees only to the person whose name is born on the check. So here you have to remember the stakeholders. Who are the stakeholders? While issuing the check, you have to remember who will issue the check. It is issued by the customer. To whom it is directing. The customer is directing to the bank. And one more person, whose name. So in this check procedure, you will have three parties, three stakeholders. Three stakeholders are there. So the name of the person, customer, and the bank. So a check is a document issued by the customer to its bank, directing it to pay the specified sum, whatever be the amount, 50,000, 1 lakh, or 1.5 lakh, whatever, in digits and words, to the person whose name is born on the check. Now, what is a check? Already I told you, check is a negotiable instrument. Check is a negotiable instrument. In banking terms, a negotiable instrument is a document. It is a document that promises its bearer a payment of the specified amount, either on furnishing the document to the banker or given date. Okay, so a negotiable instrument. Check is a negotiable instrument. It is a document. Okay, so check is a negotiable instrument that promises its bearer for payment. Yes, I am giving this check, so please make the payment. Please do the payment. The issuing party is called the drawer. One who issues the check is called the drawer of the check, and whose name is mentioned on the check is drawee. So payer, one who issues the check. Like suppose I am issuing the check. So here X and Y, there are two parties. X is issuing the check to Y. Okay. So here X is called drawer. X is called drawer. Y is called drawee. Right. Next. These are basic concepts of check. Now, what are the types of check we have? So many of us are aware we have only two types of checks, like what you call account pay checks and self checks. Apart from these two, there are n number of checks. In this session, we are going to discuss what are the types of checks in banking terminology. Let's start. Bearer check. Bearer check is the one in which the payment is made to the person bearing or carrying the check. This is keyword. This is very important. What is a bearer check? Bearing is bearing my name. Suppose on a check, if this check is bearing my name, I can approach the bank to withdraw money. See what the definition says. A bearer check is the one in which the payment is made to the person bearing or carrying the check. Suppose if I am carrying the check with my name, I can get the amount. The banks need no other authorization. They don't need any other authorization from the issuer to the allowed to make the payment. So the banks don't need any other authorization. They have to make the payment, right? So the banks need no other authorization from the issuer to be allowed to make the payment. Directly one can get the payment from this bearer check. Next, second one is banker check. What is banker checks? See, let's understand the definition first. Okay, a bank is the issuer of these types of checks. So who will issue the checks? Bank. Here, bank is the issuer. Hence, these checks are called banker checks. In banker checks, who will issue banker checks? Banks will issue. Right? The bank issues these checks on behalf of the account holder. Suppose here Mr. X is the account holder. SBI Bank is there. So, on behalf of X, SBI will issue checks. Hence, these checks are called banker checks. Why? The bank issues these checks on behalf of the account holder to make a remittance, deposits or payments to another person in the same city. Here, the specified amount is debited from the account of the customer, and then the check is issued by the bank. So, within the same city, right? So here also two parties involved. The bank issues these checks. So basically, banker checks are issued by the banks on behalf of the customer in order to make payment for the third party or any other person, right? So whatever be the amount that will be is debited from the customer's account. Here customer is Mr. X. This is the reason banker checks are called non-negotiable instrument, as there is no room for banks to dishonor these checks. See, whenever the banks issues the check, dishonor means what? Banks may reject the check. When banks rejecting the check, you have to use the word dishonoring. Rejecting due to insufficient funds or any other signature mismatches, there could be a number of reasons. So when banks are not accepting the checks, you have to use the word dishonoring the checks. But in the context of banker checks, the bank cannot dishonor the checks. Okay, why? Because here the issuing authority itself is bank. When you are issuing, you can't dishonor the checks. See, this is what this statement says. This is the reason bankers check are called non-negotiable instruments. There is no room for banks to dishonor these checks. They are valid for 3 months. Yes, by basic validity period is 3 months. They are valid for 3 months. They can be revalidated provided specific conditions are met. Okay, so validity period is 3 months. Next type, self check. This is the most common check we will see. Self check. You can have already, I think you have already come across this check. Image source is Google. The word self written on the check. See here, self. The word self written in drawing column. This is the drawing column. See, this is the basic structure of the check. Right side top you will find the date. Here amount in words, what we have seen in the definition. Amount in words. This is the check number. Here you have to do signature. Okay. Here customer's account number. Here bank name, or IFSC code and other details. This is the outlay of check. See, the word self written in the drawing column. This is the drawing column. Self written. Self checks can only be drawn at the issuer banks. So self check can be only issuer banks. So for example, only you have to draw self check from local branches, not from non-local branches. Say for example, you are having account in Delhi. Okay, you have to withdraw from Delhi branch only, not from Bangalore branch or Calcutta branch. That's what this statement explains you. Okay, self checks can only be drawn at the issuer's bank. Which branch is issued? The same branch has to clear the check. You can't go for non-local branch. Stale check. If a check is presented for payment after 3 months, because the validity period of a check is 3 months. The validity period of a check is 3 months. If you are presenting the check after 3 months, say for example, we are in September. Now today I have issued the check. September, October, November, 3 months. So if you approach the bank in December for the payment of this check, the bank will not accept. The bank will dishonor the check. What this statement says exactly. The check is called stale check. If a check is presented for payment after 3 months from the date of the check, it is called stale check. A stale check is not honored by the bank. Means the validity of the check is expired. Hence it is called stale check. Next. Traveler's check. Basically this is used by the travelers. Hence it is called traveler's check. Foreigners on vacations carry traveler checks. While they carry these foreigner checks, because there is no uniform currency in the world. In India, rupees; in America, it is dollars; in other country, different currency. European Union, European Union, euros. Okay, so in order to avoid these kind of clashes, means in India we can't accept euros, we can't accept dollars for our day-to-day purchases. So whenever foreigners are coming to a new country, suppose a foreigner is coming to India, okay, they'll get this traveler check. See, foreigners on vacations carry traveler checks instead of carrying hard cash, which can be cumbersome. It is not easy to carry good amount of hard cash. Instead of that, they can get these traveler checks. They can submit this check into the local branches. From there, they'll get the local currency. These checks are issued by them by one bank, and can be encashed in the form of currency at a bank located in another location or country. Right? So suppose ABC bank is there, they have issued the checks to me. I mean, I'm going to different country, right? There XYZ bank is there, I can take this ABC bank and I can ABC bank check, I can approach XYZ bank. From there I can withdraw the currency which is in circulation in the local country. Okay, traveler checks do not expire, there is no expiry. So what is the difference between other check and this check? These traveler checks don't have any expire. Unlike other checks, the expiry period is 3 months. But in case of traveler checks, there is no expiry date. And this can be used for future purposes. Suppose for this vacation, you haven't used this check. You can keep the check and on your next visit, you can redeem the check. You can encash the check. So there is no expiry date on expiration period for this traveler checks. Next, cross check. See, this is cross check. On top of the check, left side top of the check, you will find these two lines. What do you call? Cross check or crossed check. So, account pay. The symbol is account pay. Means two sloping lines. See, the line is sloping. Have you seen this? The line is sloping. See this one. Two sloping lines with the words AC payee. AC means account payee. Account payee written on the top left. This is top left. Written on the top left. That is a crossed check. That is a crossed check. The lines ensure that irrespective of who presents the check, the payment will be only made to the individual whose name is written. So when you are giving account check, for example, account is here, it is my name. Okay, imagine it is my name. No matter who will produce a check, suppose you can take this check. Whoever produces a check, the amount will be credited into my account only, because it is very clear on the check. My name is visible. So the lines ensure that irrespective of who presents the check, no matter who is presenting the check, the payment will only be made into the individual whose name is written on the check. Whose name is written on the check, right? Next, these checks are relatively safe. These checks are relatively safe. Why safe? Because you can track on whose account the amount has been credited. Okay, so it is very easy for tracking. These checks are relatively safe because they can be encashed only at the drawings bank. You can have the track, right? So this is cross check. Now, open check. An open check is basically an uncrossed check. So you can't find these sloping lines. You can't find these sloping lines. An open check is basically an uncrossed check. This check can be encashed at any bank, and the payment can be made to the person bearing the check. Okay, so one can get cash from any bank. Open check, basically it is not given to each and every individual. There are some criteria to get this one. An open check is basically uncrossed check. This check can be encashed at any bank. You can encash this check at any bank, and the payment can be made to the persons bearing the check. This check is transferable from original payee. Okay, so basically this check is transfer means you can convert. Transferable, non-transferable, transferable. So transferable means you can transfer the check to any other payee. The issuer needs to put signature both front and back of the check. So basically on the other side of the leaf. So this is the front side of the check. This is the front side. So back side it will be very plain. Okay, so the issuer needs to put his signature on both the front and back of the check. Issuer has to give his signature both front and the back. Next, last type, post-dated check. So post-dated check, date itself is clear. Pre means before, post means after. So today you are issuing the check, but the date of the check is somewhere around October 2nd. So today you are issuing the check 1 month after or 15 days after. date will be given, October 2nd. So the drawer can withdraw amount only on or after October 2nd. He cannot withdraw money before October 2nd. So hence it is called post-dated check. Post-dated check. See the definition. These type of checks bear a later date of being encashed. Even if the bearer presents this check to the bank immediately after getting it, the bank will only process the payment on the date mentioned in the check. This check stands valid past in the mentioned date, but not before. That's what I said. See, this check stands valid past the mentioned date, but not before. So one can withdraw the check only after the given date. Could be October 2nd or could be October 3rd, whatever be the date. On or after, not before. Hence, it is called post-dated check. Right? So in post-dated check, it will bear a date. So these are the types of check definition and types of check. Okay, thank you. In the next session, we will start with some other interesting videos on financial awareness. Thank you. Thanks for watching.